Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets. Next week, the weekly stock market analysis show. We will look at what happened in the market during the last week and learn something from it and plan for a better trade for the next day. And this is analysis for the week that's starting tomorrow, February 27, 2023. Let's dive into the charts. Here we go. This is the Nifty and the Banknifty, left side Nifty. That's the weekly charts that you're seeing here. Wide range bearishness. Look at the candle size, devastating. Heavy crackdown, right? That is 7 days. 7 days. Look at this daily candle. 7 days of continuous fall, right? And that's what you're seeing here. And it's a wide range bearish candle on the daily charts as well, and also a bull trap and a wide range bearish candle that you see on the Banknifty also. But remember that we are at a support zone. We are very close to the previous support zone and we have stopped there, so there is a possibility of a CIP bounce, and the new lower low is not breached yet and it is very close by, and 200-day moving average is also there, right? So that's a very crucial support zone, but devastating breakdown is what happened in the last week. Very good correction that has happened, and let's get the numbers. 482 points. It's a 2.7% fall, 3% fall, 1,235% on the Banknifty, 480 on the Nifty. That's what we are in. So it closed below the 20 weekly moving average support on the charts, and it has fallen below the trend line resistance that we are talking about from where the previous all-time highs has happened. So that's a close down there below that on the Nifty and the Banknifty, both of them, and both of them have reached the 20 weekly moving average. And that's it. Look, nearly 3% of crackdown is what happened. Big wide range bearishness, definitely. Daily 0.25%. Daily was kind of flat. Flat close, of course, in the red. That is, so some kind of bounce up move also happened the last Friday. So even the daily charts also showing clear bearishness. It's below the 20, 50, 100. Only thing that is left is the 200 EMA exponential moving average of 200 for the Banknifty. Also, GRG bounce is possible. Retest from the previous swing low is possible. We have seen all that, right? All demands, definite expansion on the downside. Also, there is a volatility divergence possibility. A W pattern can get formed. It can resist this level and then bounce up from here and then break out. That's possibility is still there. That's only hover the bulls right now, but it's a very crucial support zone. Any breach of the previous swing low could be deep dive into the 17,000 below levels on Banknifty to the 39,000 below levels. Means 39,000 above levels and below the 40,000. So in between that range, it can move the next week. We're talking about it. So heavy bearishness that is seen in the Bollinger Bands as well. Here, a breach of the trend line that we've been talking about has happened already. Look at the support resistance levels. What do you have? Supports down there. This chart is not that great. Half of that is cut down. So the first obvious support will be at the 17,400 nearby zones, and then after that you have the chart is not, that graph is not clear. So let me just go there and look at the levels myself. And here we go. Right, look at this. So right here you have the what do you call the 400 levels, 450 levels, which is breach ones, but it can still act as the previous swing low resist support, and downside after that you have 17,400 zones. It's also a previous swing low. We're talking about this swing and this swing lows, right? That could act as support again. That's where the market slightly bounced earlier also, and then you have the lower swing low at 17,350, and if that is breached, you have the gap support at 17,300. Right, 300 nearby zones, and if that's breach, you straight away go to this rounding number 1700 and then 7100 and then 70,000. That's where the downside moves along. So if that is breached, then this is easy downside. Similarly, upside, close major resistance 6100 retracement just gone at 17,569 will be resistance first, and then 17,652, then 17,700 rounding number, 7,600 also is the rounding number. Lots of resistance. 17,800 with the major resistance. About after 17,800 would be a Fibonacci retracement level also, and about that is 7,959, 18,000 rounding number, 18,070, 18,140 like that. All resistance and upside. Banknifty similarly, the first Resistance would be 40,000 and then 40,500 rounding number producing high, and then 40,800, that's a Fibonacci 50, and then about 4,100 and 41 rounding numbers resistance upside, then 41,600 resistance which is Fibonacci level 38 again, and then 41,800 like that goes resistance upside. Downside for the support will be the previous low zones at 39,600. And both that you know 39,900 also could be support, and then for 39,400 would be support. That's a breach. Once that breach, then the previous low next would be for 39,200, which is also a previous low here, right? So this 39,200 could act, and if that is breached, then we have a straight fall back to very straight fall to 36,800 would happen if that breach happens, right? Interim supports are there, at least previous lows at 38,400, 39,200 like that, right? A small. So how do you find these ranges? One way is we can anticipate 3 to 4% of down, 3% max downfall normally. Almost 70. That's all. Nearly 1 to 2% of reduction is what you have to anticipate. Or there's another playlist video where it teaches you how to find the range, right? And here what is put in is a combination of the Fibonacci, previous swing lows, and then primarily on the charts. But there are other ways of getting roughly guesstimating the levels also. Pivots could act as different ways. Moving averages could act as all this could be constructed by the levels, right? I've used a multiple combination of this, right? So supports are very clear. Right now, it has a immediate support down here at 39,800 zones. Then you have support at 39,600 zones. Then you have 39,400 zones. Then 39,200. The 39 rounded number, like that goes, right? So major thing is a breach of this 39,420 is that is happening means a new lower low will be created. That's what I watch out. Same Banknifty also. 17,300 is breach means new lower low could take you to 17,100, 17,000, then 16,800, 16,650 like that it goes downside, right? So that's the levels. Keep it watch. I went to the charts directly because the screenshots are not fully clear. Now moving on, the momentum and the trend indicators, Banknifty and the Nifty. That's what I'm saying. The left side is the Nifty, weekly, daily, weekly, daily. Right side you have, it's not like that. So this is the weekly charts on the left side. On the right side you have the daily charts. Downside Banknifty, left side you have weekly charts. Then you have, so what do you see here? It's very straightforward. Momentum is bearish on all time, on high time frame and long time frames, short term and medium term. And trend indicators ADX that we are using, momentum is RSI. Trend indicator is also indicating bearishness on the short term as well as it's bearishness and falling with strength. Look at this, bearish, falling, Nifty. On the weekly basis, weekly momentum is still not bearish, weekly, right? But the trend is clearly bearish on momentum as well as the trend, right? On Nifty as well as the Banknifty. I'm sorry about that. So let me wind up 1 second. So it's clear bearishness of momentum and the trend on Nifty and the Banknifty, on the short term. And short term and medium trend is bearish on the Nifty and the Banknifty. The only thing is it's a sideways still on Nifty's momentum on the weekly. That's a sign. So our clear bearishness down there with falling strength. The strength of the trend is also high, and the strength of the momentum also is high because it's rising or falling rather on the momentum perspective, right? So that's clear bearishness on the momentum indicators and the trend indicators. Volatility spike up of 8.3%. So this is 14.8, still not outside of the lower regime. But one thing I have to make a note of it: this 8.3 spike up has happened after 20% of up move and 20% of down move from previous close of the VIX. So that's a kind of volatility that we're dealing with. It's very difficult for the intraday traders and the short-term swing traders, right? So if it is 14, it should be fine. Although the VIX itself is volatile, right? VIX is an indicator of the volatility, but VIX itself within a week it moves 20% up and 20% down. It's a spinning top kind of pattern that is formed with the VIX, right? So very volatile here. Unusual kind of volatility is what you are facing. Mean percentage to 56, 20 stay out of the trade. Right? Don't short your position size if you're a professional trader, then it has to trade. Now, next analysis is the operant disrupt pattern. Operators had a short build up on futures high on the options OI for the March 2nd weekly expire that's coming on next Thursday. The put call ratio is again bearish 0.58. Nifty is clear bearishness 0.56, clear bearishness on the Banknifty also. So operators also shows bearishness. Weak spike also shows bearishness. Momentum trend also shows bearishness. Price action obviously shows everywhere bearishness. But the only good thing is it's at a support zone and it has fallen last 7 days continuously. It could take a support, consolidate, or it could support bounce up from here. And with the volatility divergence, doubly pattern, inside outside pattern that we have talked about. If you're not aware of these patterns, check out the playlist, or the technical analysis section. Let's move on. How do the sectors perform last week? Before that, opponents levels also you have to keep it not off late. So clear bearishness, the highest put writing is happening on the call side. The highest put on the call writing is seen at 17,000 and 70,600. Banknifty, the highest put and call writing support resistance are seen at 40,000, and 40,000 itself is where the highest call writing is also there. The second level is highest put and call writing is seen at 70,600 itself on Nifty, and 39,000 and 40,000 Banknifty, right? So clear bearishness evident there. Just the levels making out of this and correlate with the chart levels that we've already seen. Now let's try to find out how the sectors perform. No doubt, the sectors, all the industry sectors were falling, and it was deep cut in some of them, right? IT was falling nearly 1.7%, metal 6.4% down after such a big crackdown that has already happened. Auto sector is 2% down. Pharma is 1.3%. FMCG only 0.5%. It's only sector that has fallen less. Realty 6% again. Look at this charts. Devastating fall. Look at the metal charts down here. Such a huge fall that has happened on that, and reality also has breached that and fallen back to this neckline zones. Let's analyze the charts first. So this is what Nifty has, and the right indices hit the resistance. Momentum has hit the resistance as well. It was almost in the bullish on round, falling back to the sideways. Metal has been falling after hitting the all-time high, and big fall down, and then it has taken support at the RSI 40 on the weekly charts. Auto has hit the all-time highs and then facing resistance in the last 3 weeks, and facing resistance at the momentum also in the sideways, and the crossover is about to happen in the trend. And pharma has fallen back into the trend line, the parallel channel, and fallen into the bearish zones in the medium term, and the bearishness is increasing on the pharma. FMCG all-time highs hit resistance in the last 2-3 weeks, but still in the brink of the bullishness, you can say. Although it has slipped slightly in the sideways zones. Reality has fallen last several weeks now, from 5 to 8 to 9 weeks it has been falling, and then it has taken a support at the breakout zone from where breakout happened in 2021. That's what we are. So overall, if you see metals, you could take short positions because it's heavy bearish. Pharma also heavy bearish, right? The only good stock in good sector that is not hit too bad, even though it has fallen and short bearish candles on the weekly basis, it's still sideways overall if you see medium and short term. But other sectors, reality has hit bad. Reality also can take short positions. Pharma you can take short positions. Metal you can take short positions, but stay away from taking long positions. The IT yet, auto yet, FMCG yet, because they are all still in the sideways. Let's move on. HDFC. Now we are looking at the index heavyweights. The 7 heavyweight constituents of the index, right? So HDFC Bank still in the flag pattern, but given up the bullish momentum, and it has fallen to sideways last week. So big fall. Still that pattern of flag is there, but huge fall actually. The huge selling has happened by the Fyers definitely on the HDFC Bank. About to cross over the bearish zone, so the trend also in the medium term. So yeah, whether the HDFC, it was holding on for several weeks, at least 10-12 weeks it is holding on like this, going up down with this range, and it looks like it has almost breached it and going to slip down. HDFC Bank is what we're talking about. HDFC also is a flag pattern and big downfall. Moment has slipped to the sideways, about to cross over to the bearish zones of the moment, and the trend indicators also. Lines has been zigzagging, and then it had hit the neckline or the bottom of the rectangle box, and then it was bouncing up, but again it has taken support from middle and then bounced up. But last week was red. It is again facing resistance, and it seems like it is taken a support again at the cup and handle neckline. And yeah, so it's consolidating in sideways basically. Lines. HFG and HFG banks are also sideways and consolidating, but it was in the bullish zone, so it slipped. That's the difference. So all these three heavyweights are in the sideways. It was in process. It was rising up and about to break out, fell the resistance. Big gap resistance is out there, and now back to the sideways. It is also in the bullishness. Zones, both the sideways stocks. TCS also. It was actually broken out and then falling back to the same trend line from where the breakout happened. It was in the bullish zones, falling back in the sideways. So HDFC Bank, HDFC, Reliance, Infosys, TCS, they're all in the sideways now. Even ICICI Bank also, which attempted to bounce from the RSI support of 40, is remaining the sideways on the medium term. So all the heavyweights actually in the sideways except the Kodak Bank, which has fallen to the bearish momentum, but that has got a divergence bullish in nature, which indicates that it would be zigzagging down and up as it has been doing for several weeks now. Right, so it's up down, so it's going to a down, and now as a support is there. We just slipped back. No, definitely it will take a support at this 1635 zones. So overall, heavyweights in the medium term sideways is what we are seeing in all of those. It's again the get into the bearish zones is what I can understand. Moving on, institutional participation. Oh, that's where the last week both institutions, the Fyers and DS, both they were buying. Surprisingly, after a long time, FS ended up net buyers last week, which gave hope, but this week they have turned out to be 2,784 crores of cash selling, and net sellers. DIS have been buyers, 2,200. That's over market trash, and net longs in the derivative sections also, if you see, it has moved down. Right? Look at this. So the FIs have been selling, continue to sell with a small break that was taken last week after a long time. And FI and DIs are continuously buying since long. How long will they do that? Let's look at the global markets, global commodities, currencies, and all that. Let's start with the currencies. The dollar index is shot up 1.3%, and it's a cup and handle, and a breakout is what you can see clearly. It was climbed into the sideways from bearish zones where it had corrected to, and then back 12% correction happened now. Nearly 3% of what's happened, right? So 1.3% just won last week, 105.26. It has almost fallen back to near 100 zones, give us hope that it would fall down further, but never happened. It's a cup and handle breakout and seems to be breaking out of the handle part. So sideways momentum and rising. So that's a worry. USD and our currency pair also moved up, but slightly only. Last week, probably next week, maybe seeing the breakout. It's a W pattern. It had corrected 2%, but now this completely recovered and then bouncing with bullish momentum 82.81, very close to the all-time high which it had made at 83 points something. Right, so rupee is back to the weakest levels, and probably it may become even more bad if that breakout eventually happens. Rupee may appreciate to the lowest ever historic if it shoots up again. The dollar index is shooting up again next week, so that's a deep concern. Crude oil has been falling, and then slight flat close is what happened today, 76.47, and sideways momentum. It's a relief. Gold is not spiking again, despite the fact that the market had cracked down and then making swing lows and all that. Gold was attempting to break down. It had a 90% up move and then hit a channel top. We're talking about this. Gold is here. It's a cup and handle breakout, handle formation. It had topped, but right at the top of the handle for the second time, it failed and it's falling down and it's further fallen last time, despite the fact that market had also fallen. Gold is expected to move up, but it didn't happen. Gold has fallen on the sideways in the medium term. Crude oil we already seen, so relief is maintaining the levels near the 76 level, so it's fine. There is a divergence also again in the momentum, which could indicate that the gold could eventually move up. It's already climbed from the bearish zones where it is, and then sideways, and so sideways gold and sideways crude is what you're seeing there, and a threatening currency dollar is the trouble here now. Now, the biggest thing is the global markets. The mother market, US markets index is what you're seeing here. Dow Jones there, Nasdaq here. Down here we have the S&P 500, the broader index. So using a 3%, it's a 3% cut that has happened after hitting the top and staying for several weeks on the top of the descending wedge. Now it has fallen sideways, and then with a big 3% down. Whether it will take the support at the zones with 32,500 and 31,900, that zones is what we have to look for. If much further breakdown happens from here, then we have a problem. But as of now, sideways movement is maintained by the US indices. You can see that the 3% cut and hitting the top of the descending wedge just happened on all the indices, Nasdaq and S&P 500 are all. Momentum is sideways for all. On the medium term weekly charts we are talking about. So we'll keep a closer watch on this, whether the further bearishness is going to prevail or not is something that, if such big moves happen on a daily basis, then definitely our markets could also fall down and slip and make lower lows, and all that can happen. It can happen in conjunction, right? The global market, mother market is falling, the dollar is rising up, and our market is also at previous low. So it just increases the bearishness. The study of this global markets and the currencies just tells us that it's even more bearish here on this side as well. The stock mix is one. Stock is fully cab Indians on the long side. We can have a good RiskReward. The tight stop loss at the neckline. It's a rectangular breakout, as you see. Mounting is rising, trend is rising. Despite all that is happening, the market doesn't care about that. This stock is rising up, so even the volumes are also increasing, and then above the moving averages. So rising momentum, rising trend strength, and decent volumes, and price action is breaking out of a box pattern or rectangle pattern. So long side call, polycap India. Short swing trade opportunities. Beta. Second one, Beta is a short trade, and its momentum is falling to the bearishness and then falling further down. Trend is the bearish zones and then rising up further with strength. Bearish strength, I mean. Lower risk reward at previous candle highs above. You can have good swing opportunities to the next swing low. Right, that could be good. 1261. Till that you can ride and trail the profits on the downside. Right? So Beta India, short side trade opportunities, polycap, long side trade opportunities. Another opportunities on the Nifty. What is here is a double dial calendar split, the famous strategy that I've been using since long, and that gives consistent profit as long as you exit before the expiry day. And you can also adjust. It's basically selling near month put and call, and then taking hedges on the both sides for the 4-month strike prices, OTM strike prices primarily. So it gives a good range and good probability of profit, and then reasonable risk reward as well. So the only thing is you just should not hold on to the last day. Exceed 1 to 2% profit, you can consistently make money, and you can even roll down and roll up in case the market swings happen and breaches this selling point on the top. Right, if these 2 points are breached, adjust and roll down on the opposite side, or further extent either of the different techniques of adjustments are there. Range is very good. That's the reason for the trend. 17,200 to 17,769 on the upside. That could be held for the week, given the fact that it's substantially a big fall has happened in the last 7 days continuously. So it may consolidate. It may stay in this range. But another advantage is that in case the volatility spikes up from 14 to 20, even then it gives some advantage if the price staying for the 4 month, not falling too much, and then it can also give a better probability of making money. Right, so double level spread is what you have as a Nifty options index weekly strategy for the coming expiry on March 2nd, 2023. Let's wrap up. Now that we have seen a lot of things, it's very easy to wrap up because last week charts are clearly showing it as a crackdown, 3% crackdown, and it is breached and fallen below the crucial support zone from where new all-time highs were made earlier. And it's below that, and it's falling down after hitting the resistance on the descending wedge. Trend is bearish, pump is bearish, volatility expansions in bond Japan is bearish, rising dollar is bearish, US indices are down, 3% down, bearish, I operating risk food call ratios are all bearish. So all in favor of bearish. My view is nothing but moderate bearish. Now the hope for the bulls, what is that? It's a retest of the previous swing low, inches away from that we are, and the 200 mount DMA support is still there for the Banknifty and Nifty also. So CIP changing priority bonds is a possibility that can happen. That's what the bulls maybe keeping in mind, but we never know what happens, right? The VIX is spiked up 8% with 20% up and down move in the week. That is a kind of volatility we're facing. So uncertainty is for sure. Those markets are hitting the races, hit the resistance with the descending bed stop and then falling down. Will it take the support or will it crack down further? We'll keep a close watch. Global resistance, fears, inflation, Fed rate, COVID, war, etc. All these uncertainties are still there. Cooled up. Rupee is but weak, so it balances, and then rupee, the chances of rupee breaking out and moving above the 83 once again is a deep concern for our markets, right? 16,650 downside and 36,800 on the medium to long term is what we can look at. Medium term, not long term. 18,250 on the upside, 43,000 on the upside again on the Banknifty. So 16,650, 18,250, such a wide range. That's what medium term should look like. If that range is breached, then we just have to go on the directional side on the medium term. So as I always say, have hedge strategies only, not go have naked calls, and then have the hedge benches as well. There are different strategies for investment also. SIP mode, you can make use of the options. You check out the videos, links for the same. You can have covered calls, you can invest using cash equity puts. All these are ways of investment and rental incomes by using options, right? Regardless of where the market moves, right? So you can go for a non-directional option strategy, or you can go for spreads, so that way you'll be defining your capital, you know what you'll lose to worst case, right? So the levels of the probability is what we have to keep in mind, and then position sizing as per the volatility in the market is. These are the two things that is in our hands, right? But what market does is the market's own decisions. It's not in our hands. So just have to play it safe by protecting your capital, managing your risk, and then reading the probabilities that is shown on the charts by technical analysis, right? I hope this analysis has helped you in some way for having a better trade for the next week. And if it has helped you some way, and if you're seeing this without subscribing, please subscribe and share it to your friends also. Otherwise, we just don't have enough subscriptions to keep us motivated. So only way would be to share to your friends. So pass it on, please. And happy trading, happy learning, happy investing. Bye bye. And also, if you are interested in taking subscriptions of premium services on the Telegram, click on this link below, and it's also in the description. You can check out that. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.